Hey, what's going on, everyone? This is Jack Ram with Simply Vegas. Today, we're going to be talking about the real estate market. In particular, we're going to cover whether or not we are in a housing market bubble. And that way you can make a decision and say, hey, I can go ahead or purchase real estate. Or you can be on the side of those people that are saying, no, the housing market is just in a great bubble and everything is going to collapse. The end of the world is coming. Next year, house prices are going to go down 50%. So with that said, let's get into it. Let's see what the data says so that you can come to your own conclusion. And, maybe you will disagree with me or not, but at least I can show you my point of view and where my, my conclusions are coming from. So I was just talking to a client yesterday. She just purchased a home for $300,000, right? And she was telling me, well, back in the 1940s, I was a little young girl, and I purchased. My parents purchased this home for $4,000, right? And I was saying, wow, that's crazy, right? How inflation makes home prices go up, right? Which is what happened with her home, her first home that she lived in. And, at the end of the day, you also have to consider, however, that back then they made $100, $200. So the fact that it costed $4,000 to purchase a home is not really shocking, right? If we look at the home price index, right, ever since the 1980s, we'll see that home prices have been rising, all the way until 2006, where we had this peak and home prices came down crashing, all the way until 2012. And then they peaked back up. At the end of the day, right now, we are at an average of $317,000 as far as home sales price in Las Vegas, which shows you that, home prices have been going back up ever since the 2008 housing crisis, right? Where we had a huge bubble. But are we now in the same situation, and is this going to happen next to us, right? And in that case, we have to consider a few factors, because we have to understand why home prices go up and what affects it. What are these factors that affect it? Number one, we have inflation, and number two, we have interest rates, which directly affect affordability of of homes. So if we look at the inflation obviously is the process of appreciation of assets. So like real estate, stocks, or even a gallon of milk back in 1990 was $1. Now it is $4, right? That is inflation. Home prices go up as inflation goes up. So at the end of the day, inflation is one of the factors. And we also have to see interest rates. So let's check it out. This is the home price index. And then we have the comparison between the Case-Shiller index of the home prices and the inflation adjusted home prices. So if you look at it, after inflation, technically we're still not at the same prices that we had back in 2006. In fact, if we look at Las Vegas, we are lower. This is USA. This is Las Vegas coming up. So right here, this was in 2006. We had a way bigger bubble compared to the rest of the United States, right? And there's many reasons why. I'm not going to get into it. But the point is, after you adjust it by inflation, you'll see that we are nowhere close to what we used to be in 2006. Okay, this is where the home prices are. However, this is not adjusted by interest rates, which have a huge effect on the home prices. In fact, this is the last 30 years what's happened to the interest rates. If you look at it all the way until the 1970s, interest rates have gone up all the way until 81, where we had 18% interest rates. That's crazy, right? And then they've been coming down all the way until today, where we have 3% interest rates. So that definitely helps home buyers qualify for homes, because it makes it more affordable for them to purchase a home. So the thing is, after we look at the price of a home adjusted by inflation, You see it goes down. This is the gray line. And in addition to the inflation adjusted by interest rates, we'll see that the home prices are way lower than what they used to be back in 2006. In fact, we're nowhere close to what it used to be, as you can see. And we're at all-time lows as far as affordability in the United States, all the way back to 1980s. So saying that home prices have been going up and up and up, and that's why they're going to crash, it's such a fallacy that you just cannot justify just by looking at the home prices. You also have to adjust it by these factors. In fact, if we look at Las Vegas in particular, you'll see affordability is even lower. We had 71 in the USA. In Las Vegas, it's 65, which is it's great. And compared to 2006, when we had 146 was the index of affordability, that's just way higher than what it is right now. So saying, at the end of the day, saying that, home prices are going to crash, and we're going to have a huge crash in the real estate market, it just doesn't have any proof whatsoever. In fact, if we look at it, we also look at other factors that can influence the housing market, which is how much equity people have in homes. How do people use that equity when they pull it out? We see that back in 2006, people didn't have any equity left in their homes. They were just pulling it out to buy boats, motorcycles, going on trips, and they were all over leveraged. Also, you have to consider in 2006, we had everybody could afford a loan. I mean, you didn't even have to show proof that you had a job, and you could get a home mortgage. And there was just no lending standard, and that's what happened back in 2006 that caused us to crash eventually, right? Many people benefited from that. But nowadays, we don't have that anymore. Lending standards are still strict, and people cannot just afford a home. They can't just walk into a home and purchase it. Trust me, I do it every day, and I deal with it every day. If somebody doesn't have the requirements, they're not going to get pre-qualified. We learned our lesson from back in 2006. So the point right here is there going to be a crash in the next year or next few years, like everybody's saying? And that's where you have to come to your conclusion. You have to look at these graphs, and you got to say, look, obviously it would have been great to buy in 2012, right? But right now is not a bad time. And if we were to get some kind of correction, I'm not saying that it cannot happen. It can possibly happen later in the future. Maybe, all these people that are in forbearance will have to get kicked out and evicted by the properties and all this stuff. So people will put their homes for sale all at the same time. But at the end of the day, the housing market is strong right now. Affordability is super low. People can afford to purchase homes. And we're nowhere close to what we used to be back in 2006. So because of these reasons, I predict, in my opinion, and this is just my opinion, you have to come to your own conclusion and make your own decision, because I'm not responsible for it, right? You have to see that, hey, we are not going anywhere. Home prices can go way higher in the future. We don't know what's going to happen. And all I can see is the data right now and say, look, the data is strong. Yes, we are at all-time highs as far as home prices, but after we look at all, after we adjust it by inflation and after we adjust it by super low interest rates, we are in a different situation. I know you might be thinking, well, Jack, you are a realtor. That's why you're biased and you just want to sell me a home. I do want to sell you a home, but I don't need to sell it to you. I just have to show you the data to understand what's going on, right? And yes, I might have this realtor bias, but at the end of the day, make your own conclusion. But I don't think the housing market is going to go anywhere. We're not going to get any correction. And not nearly as bad as everybody is talking about, or some people are talking about. And also you have to consider, even if there is a correction due to maybe interest rates going back up, like kind of like what we had in 2018, right? In 2018, we had interest rates spike up because the home prices were going crazy. So the Feds decided to up the interest rates by 1.5 points. And we had a little correction or a slowdown, right? But then ever since they dropped the interest rates again, now prices are going back up. But at the end of the day, even if we do have a correction, what happens is once you try to qualify for a home after the correction, we're going to have super high interest rates. Well, not super high, but let's say interest rates go back to 4.5%, 5%. Now the same home technically is costing you the same or even more than what it's costing you right now. And even if that happens, it doesn't mean that the home prices are going to go down. So with that said, I just wanted to inform you and give you a different perspective of this, and you can come to your own conclusion. But thank you so much for watching. My name is Jack Graham, and I'm with Simply Vegas. If you found some value in this video and you want to see more real estate related videos so that you're prepared to invest in real estate, please feel free to subscribe down below. And if you need any help with buying real estate, feel free to reach out. Thank you for watching.